Hello, hello, hello.
Cool. Testing. Is that volume okay? Oh, we'll just have to stop the recording. I'll be back in one.
Right, we're good to go. I hope everyone's well. It's been a tough week, hasn't it? And some rather strange move,
Go.
but it can't be a bit of feedback. It's always professional on this show. Right, where are we? We're Nasdaq almost up on the day now. Gold getting trashed. So yeah, all been a bit strange. Start of the week. Obviously, the assassination attempt. We expected probably a little bit more dollar positive and flight to safety from that. All kind of unwound a little bit, didn't it? Data has continued to be helpful in the main. What have we got? Japan inflation numbers today. That's sort of in line to what we need for them to do stuff, but whether it's enough to make them rates up doesn't matter. Ursula managed to get through with the aid of the Green Party, who hated her in 2019, and still really to back other than in this vote. So they managed to avert that disaster scenario for the euro. They'll carry on, but there's still a massive number of people voting against the uh, recommended three people to take over, but that allows them to at least continue with the European project in the short term. It was the commentary that's come back from the people that have helped get that over the line is that they did it to prevent the right taking showing more insurgents into affairs and wanted to carry on down the centre ground. So we'll see how that continues in Europe as we progress through the next couple of years. Now, obviously, there's been that CrowdStrike situation, which has caused lots of airlines to be grounded and lots of computer systems to be messed up. That isn't a terrorist or cyber attack. It seems to be down to an upgrade. As usual, they don't really test them. They let the users find out all the problems. Mirza Moyes Hussein comes on wanting to be gift the account, and the voice is lagging. That shouldn't really be lagging, and you're uh, there's a there's a slight lag between where I'm recording and where YouTube is, but we talked about gold deliveries yesterday. That should be coming out again uh, in the next hour for what's been going on today. But it looks like Paper Crowd have got control of the market again. The physical side is on pause, or they've delivered all that they need to short term. So we mentioned on the preview last week that there'd been a lot of buying by the managed funds, ETFs. All of those are going to be physical, exchange for physical. As soon as it gets to a stage where the market makers can start showing some degree of power, then they've managed to get the market back. It is sort of consolidating the gains we made last week, but we'll have a look at that as we go along. Bletchley, is my voice clear or not, or is there a problem? So it should be pretty clear. I mean, we've found the source of low volume. Cool. So yeah, well, I'll show you what we're looking at on the gold deliveries, and we'll try and go to that page live. So the things I looked you through before. Why was PPI strong? I identified that was in that really weird government capital goods flow. Looking at the import prices that came out this week, the real anomaly is in finished and unfinished metals. So perhaps the government have been buying a load of silver and inputs for weapons, maybe with the defence budget going back. That might explain it, as we said last week, in a one-off area and wasn't across the board PPI stuff. It's always good to try and find what the detail is, looking through all the piece of data. That's as far as I've got so far. Something more obvious. Obviously, we've had small cap rotation. Russell was up 12% across 5 days, I think, the longest ever move and strength of depth for the Russell. Against that, that's the first time in ages that we've had an all-time high set and then sequential 1+ pullbacks, 1% pullbacks in Nasdaq. So these are strange markets at the moment, as you've all seen. We've all got the all-time high in gold that we just discussed, and that pulling back. It's not been easy to trade at all. And we're setting up for next week. Lots and lots of the global PMIs. Japan has their important inflation data on Friday, which is their Tokyo one. That's the real one that they want to get some strength into. And it should be really a micro week with Microsoft, Alphabet, Tesla reporting. But there's a slight fly in the ointment with the whole Biden Democrat situation. There's a lot of push for him not to be put forward. The DNC, the Democratic National Congress, are pushing to try and have him nominated before their August nomination date, so their August conference. I think so we might see something quite strange this week. If he does happen to stand down, then what happens? Do we unwind this Trump premium? By definition, that's also become a negative now, because Trump has been talking about wanting a weaker dollar, so that the Chinese yuan and the Japanese yen are both too weak. And they think that the dollar per se, and James Vance is of the same opinion, that they want to talk the dollar down. So we need to look out and be aware of that. That's helped unwind a bit of the UJ strength, although that is beginning to dig back in again. But we'll look at that. That's had a lot of its potential move, perhaps. But yeah, just look out for reversals by inference. Then that could possibly mean rally back on for the tech stocks, just as the earnings are coming through. So could be a double whammy week next week, and we have been suggesting that technically we might have put in the lows, or we're very close to a lot of these things, and we'll go through that in a few minutes. Is there anything that anybody wants to talk about? Right, top trader gold. Could you go over gold and news events next week? I'll pass stage 2. Have you received email? Okay, sorry to hear about the second bit. I don't really know anything about that. That's all about support. Boom, boom, boom. But we will talk through gold. Yeah. So, is there anything else that anybody wants to talk about? Okay, just very quickly, just go through some of the data. Find it. So Japanese inflation today, ticked up from last month, slightly below expectation, kind of in line. They were talking about needing 2% to become embedded. Kind of is. This national core is a measure that they describe as being done from the consumer point of view, so shop prices really. Next week is, or sorry, from consumer bills and things. Next week on Friday is a basket of goods, sort of traditional to how other countries do it. So there's a number coming out at the same time, but it's also Tokyo next Friday. GBP, as I said, the Bank of England talked about it. Will we have the doves from above managing to take the upper ground in the Bank of England's next meeting at the start of August? Wages came in line yesterday, no shocks. The services obviously stayed sticky, but we think a lot of that is down to Swift and hotel prices. Read through restaurant bills, etc. We've got an opportunity before base effects year on year start coming back into numbers later in the year. So if they're going to start the process and get back into line with the ECB, then this is the month to do it. Retail sales being soft today is possibly the final extra little kicker. Next week, there's evidence that some of the PMIs might still be okay. The Philly Fed came in reasonably good on manufacturing yesterday. So as long as that doesn't have a lot of really running out of control prices paid coming through the services report, there's a good chance that they may cut. And that is probably reflected in the GBP prices. Let me have a look at that. Yeah, we'll try and have a look at the Dow as well. Where are we? Just a quick run through what's happened this week. We got China's right under the cosh with their house prices down again, and this third plenum I've been talking about, which is their big strategy update every 5 years, and they haven't really said anything as yet. It's been pretty downbeat. They want to keep being a market economy rather than planned, so that's a positive in itself. But they're looking for high quality outcomes. They're not necessarily going to go throwing money at the housing sector again. So obviously, people read through that base metals would be seeing some lower demand. So that is kind of the copper idea, which is offsetting the weakness in supply that we've seen from the companies updating this week. Antofagasta and Rio were both at the bottom end of their copper mining, copper production. So that market is still relatively tight, and we'll wait to see if there's anything from China. But generally, all the metals were off over the week and overnight. As we said in the preamble, Trump is signaling he wants to see a weaker dollar. But both Biden and Trump are very at the forefront of these sanctions against China. And they've had a go at Tokyo Electron and ASML during the week. Literally, ASML warning them about taking on too many Chinese employees. There's a history of IP being stolen at these places. They don't want that to happen. Obviously, it's a tough battle, isn't it? The technology is Taiwan Semi and others, and NVIDIA versus supply of rare earth metals is very much Chinese dominated. So they're at loggerheads with who has the upper ground for development, but hopefully they'll all grow up and we'll just get on with it eventually. But obviously, put a spanner into the whole, right in the middle of the rotation, which we said if we start seeing the large cap tech sell off into small caps, the market would come off, even if, as we've seen last week, 400 stocks go up, the market still comes off. And that's what we've still been seeing over the week. But when we go through the charts, Naughty. Most people talk about fundamentals, control the market, blah, blah, which they do. The only fundamental site that makes sense to me is Forex Factory. Why is that the only place that makes sense? They comment on, a big team comments on some of the issues, yeah, but the whole market, technical analysis, and you know that I love technical analysis. I was a nerd doing it when nobody else wanted to, the way through when it was all fundamentals, and you'll keep seeing videos, and there's a couple on Riz's channel where institutional traders take very little notice of it. Because they've got the pricing power, they've got the orders, they are making the volume, the turns, the order blocks, they're causing the gaps, the clients are causing the gaps, etc. But technicals do rhyme, technicals are worth following, but it isn't, and obviously you can make a living out of just following technicals, but it is very difficult, and it's a much better idea to follow fundamentals and technicals and have a fuller, richer understanding of what's going on. You'd really struggle in the real world to get somebody to put a trade purely on technicals with the big money. Whereas at retail end, when you don't have the information or you're not party to making the people make decisions that have the money, then it's hard to be at one with that as a basic premise. But you have to respect it because that is how the real world works. But the power for us and the power for a retail trader is to try and combine both of those. For instance, when I'm someone like me in the institutional market would be trading and also creating technical and fundamental arguments, trade ideas, and that's where the power really comes in. So when you see interviews with traders, they may not necessarily follow technicals. It's not something they do because they inherently have that price action built in, and they've got a feel for where the orders are, and then they're taking the end of orders most of the time. So that's when you tend to get sort of the dispersions and the manipulations. It's when they're finishing an order off at the high or low and then moving it. It used to happen a lot more before you had compliance measuring everything that you do. But then within that, there are also the algos, which people talk about the algos, and they're programmed to react at certain times of day, which is why some people have started to follow timing ideas during the day. Because if you're programming an algo, then you obviously have to pick times when it trades. But these things do have a massive back weighting to the end of the day. A lot of markets, people try and execute closer to the final print unless there's an anomalous price action during the day. So there are technicals within technicals, but at the end of the day, they're only going to buy it up or sell it for fundamental reasons. They're not there to give their money away blindly on a guess. The majority of flows, and this is why we talk about playing and looking at alpha futures, is that is a market-derived price based on what the real users and speculators are doing in combination, based on all the information and based on forward curves, and much more than just looking directly at a spot market chart. So I kind of agree and disagree, and that's the whole reason we're doing this. So how do you analyze non-figures news site to our benefit? I don't really understand that sentence. So the whole point of what we're doing here is to show you, and on my chat, and come and talk to me, ask me anytime, anything, ask me on here would be helpful while we're live, of things, how they move, what we're looking at, how that reads through. On my subchat on fundamentals, there's a little 3 or 4 page word just giving you a few ideas of places to look. It's not a one-stop, read one book, know it all thing. Just like technicals, you have to build it up, you have to be dynamic, you have to understand how things work, revisions, things are always moving. You're in bear markets, bull markets, expansionary periods, tightening periods, recessions, secular changes, productivity changes like we've got with AI. All these things mean that whilst technicals repeat and rhyme, they're not guaranteed, but you'll see some form of pattern follow through. It's important we know, I always just say, describe it as the classic. There's no good knowing all the trees if you don't know which wood you're in, because you're just going to get lost. So CPI came in okay. Relatives. Yes, even though these are 1 and 2 star, there's important stuff within the US export and import prices if you drill into it, and you can see where all the price pressures are on which particular sectors. I just want to say it's worth a 5-minute read. And then Canadian CPI came in line to lower, but a lot of that is down to their durable goods, the large items. So it may not necessarily be seen as a weak point in order to do another rate cut, but they are moving in the right direction. But both US and Canada are seeing weakness in recreational spend. So something to keep an eye on. So if you then, when you take away something like that, you go and have a look to see if there are any heavy weighted stocks in a particular index that you're trading to see whether that will have an effect. You go from macro down to micro, start at the top, that's top down. If you start and you look at companies and build it up from the bottom, that is literally bottom up. So not everybody does the same analysis. Sometimes they suggest the same thing. Sometimes it's completely opposite. What I tried to suggest during the week on those retail sales for the US, they've been similar for the last 3 months on a seasonal adjusted basis. So the Fed will be relaxed that they've not really, the consumer is the biggest part of the economy. It's not fallen off a cliff. Neither is it going crazy. There's this whole up and down effect that has happened, which is all to do with this motor side of things. There was a shutdown or some kind of registration thing that held back a lot of auto sales that came back online all at once, and then it's dropped back down this month to be back on that, even on the unadjusted numbers to be more or less flat around 700. So again, they're not going to be thinking that that's falling off a cliff. That is an anomaly which is just working its way out. Anyone that's taken my advice and tried to look at the Atlanta Fed data, built it up in real time, that has now jumped back up into the high twos. Probably worth having a look at that, I think, if we haven't. Yeah. So that's a UK stuff. Look, restaurants and transport is where all the high prices, late ticket prices, that transport model and hotel model. If you're a late booker, you can see Taylor Swift, etc. That was putting undue pressure, but a lot of things are really under control, if not flatlining. So hopefully the Bank of England can look through that, other than the 3 non-movers, Haskell, Mann and Hill. New Zealand's CPI dropped, which is in line with what they were suggesting last week when they changed their whole narrative, bringing forward likely rate cuts to November, potentially. So as of Wednesday night, after the retail sales didn't create the PCE effect, the actual personal consumption shoved it back up to 2.7. What was good this week for people, which we're talking about on Monday, is the whole idea of people buying into bonds for inflation. If you don't trust the inflation outlook, you don't buy long duration bonds, 10, 20, 30 years, because that has a geared effect. Lots of years of cash flows divided by an interest rate multiplied by all those years. So the net present value goes down much quicker. It's a duration effect. It's like beta is on stocks. It's duration in bonds. So the 20-year auction went well. It was below. It was more or less in line with the last print at 4.466. So people panicking further out. In fact, we get some. No, Michigan's next week. So yeah, as of tomorrow, it's a blackout for the US talking heads until the meeting on the 31st. So they've been surprisingly quiet, but the majority of them that have spoken are kind of admitting the data is going the right way, and it's when not if. But Waller was trying to say that he couldn't quite identify it, and Barkin, who is a big hawk, was saying that he definitely needs to see more. Yeah, it's he just never moves. So yeah, the bit of the pullback in the yen has helped bring the import back down into line for Japan. So they ended up with a positive trade balance, but it was all on the falling level of imports rather than the exports going crazy. Wages and employment, the weakest reading since 22, as we were saying, that was in line. Unemployment steady. And something people are asking about oats versus buns during the week, and obviously they reacted well post the far right not getting in, and there was no wobble overnight because Ursula managed to get in, but they've had auctions, a Spanish auction as well, which is another euro reflection. They've all been well bid. It shows you that the tensions are easing a little bit. I thought the key point from yesterday's ECB is that they're now data dependent, not data point dependent. It's just a subtle shift, but just basically means that they don't want you looking particularly just at wages or CPI or any one thing. They're looking at the holistic mix. Basically, that means they're expecting the US to cut in September and they want to follow it in. So they're not going to tie themselves to a data point that stops them doing that. Jobless claims jumped yesterday, having fallen the previous week, but the 4-week average is going up. That fits nicely with the Fed's whole focus on looking at employment. That is still going in a dovish way. The markets moved in a very strange way yesterday. Didn't really reflect what the underlying data was. We had other issues going on with the whole tech unwind. And a lot of that can affect the currency. What you need to remember with the currencies when you have big market movements either in bonds or equities is that you've literally got huge flows there. So the dollar can be completely driven by whether it's domestic or overseas money that is buying or selling, et cetera, et cetera. And similarly, you've got people selling gold yesterday to buy the dollar, in effect, when gold's crashing. So you get reasons why the dollar is strong. Lifetime Mizzy, lots of hearts. Hearts back to you. Thank you. Any particular reason? Stock-wise this week, we started poorly for miners on the Chinese data, and some of the miners themselves were saying there were issues on their production. The luxury side of things was struggling on Chinese demand. That's going to come through next week, and there's Hermes and LVMH next week, so look for weakness there in Europe. Trump media burns, didn't it? We had the 30-year above the 2-year. We mentioned that on Monday. Goldman's, the vampire squid, they're winning in fixed income equity and capital markets. They never fail. Hugo Boss again, high-end fashion. So people are becoming a little bit more circumspect about their spend. So just look out for the luxury end if you've got any investments that way. Ocado jumped back. That's a tech stock in the UK, really. People ignore that. It's not really. They do delivery on the side. They're all about their tech warehouses and that technology. So they said they were well on track on that and seeing good orders. All of the US banks have had good investment banking and asset management fees, peak profits and revenues. Net interest margins has been a problem. And sort of expenses around the side. Payment systems, electronic payment systems, they're good. I'm obviously going to get good. Wise, we actually traded quite a few of those. That was a good update from Wise. Strong momentum, customers coming over to the platforms. Just another step in the whole demonetizing the world, isn't it? ASML, remember for the whole tech backdrop, TSMC and ASML both would have been upgrades this week and would have been up were it not for the whole Trump-Biden accusations and warnings about behavior and opening the door to Chinese, etc. So that shows you under the hood the rally that we're expecting in Nasdaq, and probably through the tech numbers next week. He's alive and well. So we've been sidetracked by this whole macro down Trump situation. It's another reason why the consolidation is nearly over, and we'll have a look at that in a minute. There was some industrial weakness coming through the Swedish Scandis. They are the leading indicators, tend to report first. They've got orders down, so just be careful about this whole rotation play out of the tech into the mainstream industrials. It might mean that the Dow underperforms the tech again. There's no reason for that to happen in the next week or so if that comes through in the US numbers. But yeah, there were sort of 5% misses on expected orders from all the big capital goods industrials. So that's something to be careful of. Nokia seen a 32% drop in profit on all this 5G equipment. You've got to wonder if 5G is going to be a bit like a dot-com bubble. Absolutely overspent on it. Not anyone's made any money out of it, but as AI comes through, does 5G suddenly have a use? You can't sort of see it in the first instance, but they'll need bigger bandwidth as we go on. So potential for Nokia to come back. Talking heads has said not too much. Goolsby is the go out to bat for the Doves. He's not a voter, but he's the most sensible and most excitable talker, so he's always good to watch. Powell, brilliant interview if you get a chance to watch it, with Rubenstein on gold on Bloomberg, Business Week Bloomberg. It was at the Economic Forum of Club Washington, and he said he wouldn't talk about signaling, but did just about everything to suggest that things are in line for September. Daily, again, she's a bit in the middle. Confidence growing that we're on the path to 2% inflation, Fed goal. Kugler, she's a bit hawkish, expressed cautious optimism that we're returning towards that. Starting to see more progress on the three things that will make it happen: goods, services, and housing all at the same time. So that's encouraging. Then again, Barkin thinks that the data is suggesting the labour market is changing, but he wants to be deliberate with policy. That means he wants to be behind the curve and wait until everything has gone to shit before he does anything. Because even Waller said the data warrants a soft landing. We're closer to a cut. So at least he can see it. I'll update on the others when they come through today. So any questions from anything that's happened this week before we go through the chart? So gold is the tricky one, isn't it? I need to so we will be at the start of the week. We were talking about we're in this 1-2 nesting situation for breakout, and I started looking for the impulsive wave threes because we should be in a bunch of wave threes. So I've tightened up that chart. The blue lines here, you can see the small blue waves. These are lower degree waves. Their third wave came out literally around the 1.618 at 2480. Put a consolidation in, and then the actual last top. So we talked about there being confluences of wave three. So next degree up, this sub micro 3 here, the black 2.618, all in the same ballpark. So we're looking to have a little bit of consolidation, but nothing like what we've got at the moment. The pattern won't really change unless we take out the 2385. Top trader gold. You watched the Powell interview. I thought that was a good interview. Sarah Eisen in the ECB one with the Brazilian central bank guy, I've forgotten his name, and Lagarde was just ridiculously silly, whereas Rubenstein played the fool much better. And I thought got Powell to interact rather candidly. That was a good interview. So 2385 is where we shouldn't really be pulling back into because it's a third wave. We're in a series of third waves. So you shouldn't have overlap to that may mean that we're more advanced than we thought, but we'll have to keep an eye on that. I would like to think from the action we saw down here at the start of the week, when it was quite obvious that there were lots of closing out, the actually asking for deliveries, which was driving this up. I'd like to think there's still some physical gold buyers around this 2390, 2400 level. They're obviously going to get tested. Marcin Kuska, having seen your second question first, I suspect you're correct. What's happening with payouts being flagged, even though I've no idea what is going on. Expect you've got to go to public chat and support. Alex is back, and obviously he will make sure that everything is happening that should be happening. Perhaps chat him, go to public chat. Things are being paid out. I've seen it. There's hardly anything that hasn't gone through, if not for a reason. So there's potential KYC issues. It's not me. I can't actually see what the situation is. So there's no point me getting involved. You need to go into public chat environment. I'm sorry. Or the support tickets. So yeah, so we're doing what looks like a deep wave 4. Let's just see where that is in the setup. Which waves are we on? So it's already quite a deep wave 4, having gone to beyond 61.8, 77.6. I'm starting to think maybe we've got a 1 and a 2 in here. We might have to adjust just how advanced we are in the whole play, or we might be further along than we thought. I will have another look for the weekend, but for now, we know that 2385 is the first point here for things to change. 2390 is the previous wave 2 low within the previous structure. That can go, but it's this one here. We don't really want to go back into wave 1, otherwise this could be a wave 1, or it could be a wave 5 scenario that's finished. Be an ending. The only way to get overlap is if you're in an ending diagonal, so it may be much further advanced in the whole structure of 3s, which there should still be more upside. At the moment, we're on the perfect kind of prediction where we thought we might come to. That needs to hold 2385 and 2368. That's an important channel in there. What does everyone else think about gold? It's been a slap across the chops the last 2 days, hasn't it? Just going to try and find a bookmark. So I showed this yesterday, which is what I was talking about, which is a page on the CME to go and see what the exchange notified deliveries are. You've got to remember in gold that there's over the counter, which is stuff done between people separately on their own terms, and you've got the exchange products. And it's difficult to know what the total situation is, but in general, the paper market is dominating in comics. Very little gets taken to physical, but more and more is relative because there's less open interest. But this is a page to go to on a daily basis just to see what people have asked for. and by definition, that is. I think I clicked on the right bit, didn't I? Let's double check. Yeah, so any of the astute out there will see that there are copper futures being delivered again, silver futures, but there ain't no gold today. So that's the second day in a row where there's no physical standing in the way. Whether there's stuff out there for next week is a different matter, and we'll see that. But the key to what yesterday's was, uh, see if I can find that for you. Just whether I can get you to see that. I've got a feeling that's not going to show up. Is that just a tiny blob? Yeah, sorry, I can't. If anyone can remember, I put it on my chat yesterday, so you can find it on there. But what it said yesterday, that there were 6 delivery contracts, but month to date there'd been 3,649. So that is physical demand, 3,649 times 100 ounces of gold. Quite a lot of gold, really, to find, and that's been driving the price up in July. 2 days with there being no contracts, obviously you can do the maths. So it'll be interesting to see whether they are walking into buyers of physical around here. It looks like the market's trying to test them. They're going to test that 2,400 watts. Is a bit like when we were at 2,000 back in February, and they tried to slam it through, and we pinged again because they literally ran into the physical guys. So it's good that we can see a little bit of what's going on from the actual exchange, but we don't know what the contracts are like away the OTC stuff. Dan Joseph, you never received your prize from the event. Well, I was told yesterday by someone that they had, so they are being paid out. Contact Alex because he's in charge of that. But I don't know if it's you or not, but there was somebody in that event who won a 25,000 account and tried to write it in as a 100,000 account. Hopefully, you're watching today because whoever that was isn't being paid at all. Just you cheat in life, you don't win, and we knew that because the guy who was doing all the writing down had a completely different way of writing it, K. So be careful, do your due diligence next time you try and cheat, whoever it was. But I'm not saying that's you, Dan, but I don't actually know who it is, but someone did. So by all means, check with Alex and find out where your prize is. So yeah, we're just going to have to see how this plays out at the moment. And we're back against that trend channel where all the twos have been stopping. Yeah, it's kind of unfortunately it's a watch and wait at the moment. I wouldn't get overly bearish. Right, dollar wise. Can we see that one? Yeah. So we've been doing this series of ones, twos, one down, two up, and then lower degree ones and twos. So we said we're in a third wave, which potentially is a lower low, and we're in there, and then we're doing a kind of consolidation at the moment. At the start of the week, we had a consolidation from Trump. I thought that might actually go a bit higher at the start of the week, but it held and kept a valid 5 waves in place. So that looks like we are playing out. What this should mean is that there's at least one more low here, but that should be putting in the first of 5. So I'm looking for some form of continued breakdown. This could be anywhere down here before we then get a retracement, which should be 104.5. So we've been playing this out forever and a day, but this will be the final kind of third wave breakdown. Whereas that one's saying 1 there. That's going to be the third of third. So when we get the middle wave of that sell-off again, which probably lines up with August time, the end of the potential equity rally we're going to talk about through earnings season, etc. We'll have a very powerful leg down, but in the meantime, look, we're going to be in some quite choppy 1% and 2% rotation. That's going to be a lot of flip-flopping on political and Fed central bank sort of narrative changing about whether we're going to get the rate cut or not. They do have Jackson Hole in August, which is a bit of a jolly up, but they normally try and announce or set the scene for the final quarter's kind of economic policy ideas. It's highly likely if the data's been friendly, they'll set that up for the rate cut is coming kind of rhetoric. But in the meantime, you know, we've been talking about ever impulsive on the way down. We've put that 5 waves in. This could be all done in this one move here. We could do a 3 swing element for a 4 before we go again. But going into next week, what have we got really? There's not a huge amount of macro. It's all mainly micro. US wise, we've got PMIs, so that obviously could have a lot to say. At the moment, the expectation is that there's been a little bit of a recovery, which would be slightly dollar positive. We're in a dollar, which is that might be enough to put in that thing. But on the basis it's on Wednesday, I think we've got every chance that we're selling off in the dollar again by then. So is that suggesting we're getting weakness? But there's not much outside that for data. For the first 2 days, it's super quiet. We've got jobless claims Thursday. There's a 7-year bond auction on Thursday next week. All the bond auctions have gone pretty well at the moment. So again, the only macro thing apart outside Friday, we've got PCE next Friday. So again, we've seen the CPI and PPI, all the elements that feed into that are okay. So that should be a sort of neutral at best kind of idea for Friday when we get to the dollar. Michigan surveys, spending and income. At the end of the week, just sit with the dollar being back in to something of a weak spot. If we could get a beat on Japanese CPI at the end of the week, that could help as well. Not much in Europe either to change anything. So it could be, you know, but they might read the activity strength in Europe if that comes through as a reason for delayed rates. Might just get if you have UJ and EU both go the right way, then that's how you can get the dollar moving. Earnings wise, the big earnings are Tuesday after hours, Microsoft, Alphabet, Tesla, etc. So that again sits with maybe a bit of risk on. And it goes mainly European big stocks after that. Anyone else got any ideas on the dollar at the moment? It just keeps playing out how we say, but we forever having the retracements. to get that really $3 or $4 sell-off. No questions today. You're all very quiet. So sterling, we started the week looking for this 345 to play out, didn't we? We're in here. We got the tiny 3, had some consolidation, and then we put in the high, the 5, puts it into 1, and then we were looking for a pullback, which obviously it's looking more like 5 waves there, a bounce back, and then further selling off. So again, I'm looking for a little bit more evidence that we're going for that August rate cut in the next few sessions. Back down here for that big demand zone that we talked about before that sits around the 61.8 fib, which is a classic for wave 2. So I do feel like we could do that now. It's starting to look like 128 is a potential. But once we get that out of the way, then obviously it moves back towards what's the US going to do. And I think the relative starts to move back towards the favour of the dollar, doesn't it? Mainly because the UK is going to struggle data-wise unless we go activity drops off the cliff to justify much more than one more rate cut this year. Just the way that some of the inflation data is going to come through. Yeah, DXY and bond market next week. Top trader. The bond market has been very well behaved, and it does feel like there's a lot of money flowing into it. If we can once we start moving towards that whole idea of the rates coming off properly, the weaker dollar rhetoric steadying still, and you get the decent earnings coming through in a rally in the stock, then I think the bond market will see a lot of flow. What you're going to see is the money market funds unwinding to find a home. Very much in the latter stages of the summer equity rally, so you might not. And it's traditionally once you get into August, you don't tend to see net flows. So this is probably going to be a retail and hedge fund driven rally back into August, and then it's probably fade the market for a few weeks, seasonalities against you, etc., and then we'll be full into the presidential side of the dollar, etc. You might have that'll be the time when we're having the bigger size wave 2 consolidation that I showed. Yeah, so I think that's one of 5 that we've put in. As soon as we put this 2 in, we should have a decent rally. So that could potentially be the Bank of England bottling it and not actually going for the cut, in which case you get a huge surge up to that 133.4 level. That may be the playbook, but in the first instance, I think we've got some sort of building expectation that they might cut to come through, I think. So bonds, I think, again, we said unless the structure won't change unless we take out this low over here at 109 on the US 10-year. That's had 5 wave moves up and it's doing a consolidation. Expect to see further upside in the US 10-year. Momentum seems to be going that way. Somebody asked about the Oaks bund spread yesterday. And again, that's continued to flatline, but we're not going to go anywhere really until the French sort out the fallout from the election. I'd expect this to be consolidation until the spread either comes in again or widens. So it's a vol play there really at the moment, as opposed to I wouldn't want to take that on. We've got our Friday problem of not switching tabs. So just saying that this is the consolidation area here. This will come down if the French put a decent fiscal light policy in, but if the left get any control, then this is coming back up here again. EU, very similar to sterling. We suggested this was the pattern from the start of the week, the 345. You put in that 3 top. Again, is this the whole of the 4 pullback, or is it going to have a small bounce and do a double? We need to keep an eye on. But expectation is that we are going higher for the move. We said we're going to get that 110. I still think that's coming. UJ, everyone's gone quiet. Nobody wants to be a bull now because the intervention's happening. We talked about we've been stuck in this very tight 1, 2, 3, 4, 5 minor waves, the red waves, which has all been part of the blue channel on the way up as well, the 2, 3, 4 channel. Once you've got 2, 3, and 4, you can forget 1 on these things. That's been a very predictive channel. We've broken out of it, which is why I've decided that that is the 5th of the 5th. And we're now in a proper consolidation wave. We were talking on Monday in here, weren't we? Is this going to do, has this 3 swing finished it off? But we'd had that tiny new low. So we said that it's probably now going to do a double, in which case it did put in an expanded flat there. We're now working down. That is a 5 wave. So that could be the finishing wave down to here, which is not far off equal legs. It's within the previous 4th wave, which is this over here. So it's a classic place to stop. If you want to be a buyer of UJ, then that is your obvious ultimate stop loss at 155. Remember previously 152 was the big level. 155 is where the original super breakout options trade was done. Are people still there on the pullback? And so far it's bounced off it. So it's all about how this develops now. Is that just another connector for a further leg down into this territory? All still possible. So be very careful at the moment. And we're going into the Japanese meeting on the 31st. So look out. And that is the same day as the Fed meeting and the day before the Bank of England. But the market is increasingly expecting them to do something. And yet, last couple of days, a little bit of pushback on that. And it all depends on getting a good inflation print from Tokyo next Friday. If they don't actually raise rates and only do the JGBs, I think we probably have bottomed here and there'll be another move up. If they do, obviously, have a change of policy. If they were to raise rates and say that they're definitely on a path to raising rates, then we can blast through to 152. But there's a lot to wish for there. And to be quite honest, I still think they're going to budget. There's one more high to come. The cycle 5th wave, which is a back challenge to a new high. We'll be talking about 167 being the ultimate test for the bodge. If they don't time this properly, and if the US dollar doesn't come off as we're expecting it to, then that comes back into play. So, funny enough, no one's really playing it at the moment because we're left slap bang in the middle of what to do. Personally, I'd be playing that as a buy if it comes back down towards that 155. I'd have a speculative buy until it breaks. Top trader gold, long Russell. You've had the week of your life. It's had its best ever 5-day move, hasn't it? Until yesterday. Very well played. DAX has been going nowhere, caught up in no man's land. Looks very much like we did put in a new high here. That's the fifth wave. And there's the end of. Yeah, so it's the fifth blue. Oops. So we're now into a consolidation. Looking for a three-wave swing in the first instance. And if that is a two-wave, you're looking for 61.8 to start with. Just taking that out. It's not rallying, so we may have put in a low there. So it's a buy with that as a low for me. This is the ultimate change in structure down here at 17,950. That's still, what's that, 2% away? 2% of downside. If you need a wider stop loss, it very much looks like the DAX is close to a bottom. Messy chart time, but yet we had MAC divergence for the third wave to a fifth wave, even though that was a third wave in itself. So we'd expect the momentum, as we said before, if it's not going to be heavy volume, the momentum may not follow through here. So you could easily have a lower peak here than this red 3 peak. The MACD to finish out again at the top of the channel. It's an ideal pullback. It's in a valid pullback range, and it's right along the bottom of what had been the 2, 3, 4 prediction. It's gone to its predicted level at the moment, and we're bouncing off. We've only wicked through that channel, and we're back in it. So this could be the moment to be long the Nasdaq for its final little breakout hoo-ha. The MACD's supportive, and then this is when we're into August, mid-August into September, traditional seasonal weakness. That is when there's potential for a 10% plus, end of the world panic time, but that is all part of the 3, 4, 5, because then we're into rally monkey time, presidential election, and end of year seasonality. So that's the pattern that's still playing out. Still 3, 4, 5s. We've done what is an anomalous pullback, not really on proper selling for the wrong reasons, isn't it? Because the underlying earnings are still going up. This is all on implication of future US policy and interpretation. That's not any real hard data, and it's all been done in a rotation out of the big winners into the smaller winners in the index and obviously into the Russell. So I'm still happy at the moment that fits. The only other way that doesn't fit is if, again, if we've actually topped out at a high degree and we have to move that 3 down to here, in which case the 4 sell-off would be advanced. I don't think seasonally it's right. We're going to sell off here and then do a super bounce within 2 weeks. I think we bounce from here. That's right on top of the positive earnings, and that takes us right into NVIDIA Travel and Arrive, and Jackson Hole. Absolutely. So it's a classic. Once we get the feeling, they might do the rhetoric of we're likely to go, but it will be still data dependent. It's not a start of a cycle, that kind of nonsense. In which case you get a little bit of panic unwind. So at the moment, it's fitting potential A1 fundamental read, and the technical seems to be there suggesting it as well. So these are the kind of periods that I'm looking for when technicals and fundamentals potentially suggesting the same thing. So I'm actually long Nasdaq right now. So not telling you that you need to be, but that is the thing I've been waiting for a few weeks. And we'll see how we get on. Which one do we look at? We'll go to that one first, don't we? Again, lots of writing. Only really doing this for showing you the rotation thing again. So these 200-day moving average, look, they're above previous peaks. So it really tells you that the breadth is building for another breakout. Because after each one of these, once you start to break, once it starts to peak, then the market sold off. But the breadth meant that the market was okay. So it's these times when you're panicking, when the breadth is lower down, it's telling you that you're about to have a sell-off. So we had a sell-off into widening market breadth, which is the one thing that we were looking for. We said that that would probably create weakness in the market, but it's positive for the market overall. And once you get the earnings coming through and the techs can rally, then you've got everything moving in the same direction. But that is good. This is one thing everyone's been moaning about. You're now getting the breadth. And we start to see a little bit of volume into the pullbacks. That is telling you that you've got rotation going on. So good. Underneath the hood, that looks good. And we've also got this line, the 50-day moving average, that is back up to the market positive levels of 70s, 80s. Yeah, I mean, you'd imagine that if the 200 is improving the 50-day, by definition, it'd have to be a strange set of circumstances for that not to be the case. It's not showing on there, is it? I'm just going to stop the sharings a minute, just because we're getting multiple. Yeah, what I was saying there, if you can see it this time, 200-day moving average, stocks trading above it. That's showing you that you've got breadth coming in. When that's really low, that's showing you that you're topping out and it's going up on fumes, which is what we had. We've had that a couple of times now. Then once the breadth comes back in, market pushes on. So it's a good indicator. So is the number of stocks above the 50-day moving average. That's returned back to the more positive readings. So it's another backup for why this potentially isn't going to be as deep as we thought. The S&P, interesting mix of stocks. Does it come back and challenge this 50-day moving average? But I'm suspecting it's rather like the NASDAQ setup. As we said, don't fight the trend. We had 3, 4, then we had another 5 high here. I expect this whole move to finish with an overthrow of its 2, 3, 4 channel. Again, this is predicting that the fourth wave is going to be around the channel low. We're here with a small overthrow. So again, the perfect turning spot for the S&P 500, which again should be getting a rally of 4 or 5% from here to potentially top out into August. So NASDAQ and S&P, they've both crossed their trend line, parallel trend channel lines that we use in Elliott Wave. So that is a good spot to be buying. Obviously, you can have a stop loss in with the double bottom there, just in case it ends up being a double. This could just be a connector here, in which case we blow up. But I'm kind of thinking that's not going to happen unless we get an earnings miss. But if we have an earnings miss, it's all bets off from the tech, and then we are in a properly advanced position. We might have to roll down this channel and say that it's over here. But for now, it's set up for speculative as we've been placed. One more high before we roll. So if anything, this is extended, hasn't it? More than we thought. Just like to double check when we have to do that the price ranges fit. Okay, so 3 is bigger than 1. Doesn't really matter what 5 does. 5 is an extending wave, so that very much looks like that is 5 swings for a minor 1 top. So we are into consolidation pattern, as you would expect. Now the Dow's interesting. So remember what I was saying, potential non-confirmation with the industrial stocks potentially keeping that mixed. So could do a little bit more downside in the Dow potentially. See where we're looking. Yeah, so if it was a classic 61.8, it'd be back here to 39,000. So perhaps it gets dragged along with the other indices, and we only get a 38%. It's done nearly 23. I think it's telling us that the Dow is probably going to lag. There's potential for that one to be the underperformer, and that would make sense. Let's go back into tech. Moment, I don't think we've done enough to say that this is a valid finish for the Dow. So just be careful. There's probably a little bit more downside. May be held with the demand that we had here, but if anything, it's more likely 38.2, 39. So it's only a couple of percent in it. So I think the potential is for the Dow to underperform the other indices. So I'm looking at another challenge back at 40,000, maybe slightly below. But more work needs to be done on that. I just think that the makeup of the stocks in the Dow is what's interesting. I may be wrong, but I think that's the one to fade versus the others. How's our beautiful Nikkei 225 got on? I haven't looked at this for a couple of days. So it actually did a double extension. So that moved up to there. Are we going to retest 40, which we wanted it to do? So we're back into buy zone, aren't we here? And that is around equal legs. So a 2% downside for it to be something else is your wide buy with a wide stop loss. But it is I think it's a fourth wave. So we're in the region where we'd like it to stop. So at the moment, that is ticking the boxes for renewed upside soon in the Nikkei 225. We've hit the target. Let's not get scared once we've got back to the target. So speculative buy again in the Nikkei, but again, 39,100 as an ultimate stop. If that's too big for you, then you've got 39.7, you've got 0.5% away. FTSE momentum still dire. still going sideways, could still be in this fourth wave extending sideways, hasn't really shown signs of breaking out yet. We haven't got any higher high in this latest pattern. Obviously, we'll get caught up in, if we're right about the Nasdaq and S&P, then we probably will have some form of breakout in here, but there's no guarantee that this is going to go to an all-time high for the move. If anything, the recovery was so big that this could well be, may well just put a connector in a strength relative to the US indices, because we're looking for blow off here, and then in which case we do a double correction. So we might not even get to this third high here, the primary wave, the intermediate wave 3 high, may come much later in the year. So this is, for the FTSE, very important new high required, 84, 80 plus, in order to keep this structure as it's labelled at the moment. Otherwise, we're still in this fourth wave. Again, I'd love to see it come off a little bit more, because from a UK perspective, things are probably going to get better, and it'll be a good opportunity to make some money at home. But at the moment, tricky. Again, we need to see some heavyweight winners, and things like Rio and the miners not doing that well. It's going to be tough for that index to be impulsive. So avoid the FTSE for the minute. I don't think it's got the setup for a new high, and it could easily be more downside. So not the one to play. Any other questions as we go along? So we spoke on Monday about how we'd been expecting this breakout for S&P equal weight. Look, we're now seeing that start to sell off, which is telling us that perhaps this is the early signs that we might be going back towards the heavyweight stocks. Just be careful. That could definitely, for us to get that rally in Nasdaq and S&P, then we need this to come and break down through the other side. Oh, come on, you're killing me. Why is that not showing? I'm blaming it. I've obviously been the early mover on CrowdStrike for about a month. There it is, right. So I said we predicted that movement out. If we're going to get the rotation, it would give us a sell-off in the overall index. That's now just beginning to unwind. Is that telling us that we're right about the Nasdaq breakout? It's another confluence. Where's the silver? Silver day chart. Yeah, what you thinking? Top trader gold? This is what everyone's worried about. If we're in this 2, 3, 4 breakout channel still, people are worried about that line breaking. But That could mean that this isn't the actual fourth wave. 'Cause these are all subwaves below it. So we're not there's that we don't mind that overthrow there because we carried on in the channel. Yeah, I mean it's quite it is a spot where people are worried that there might be more downside, but I think it will just basically mean this fourth wave here is trading within its previous fourth wave, which is still valid down to around 26, and the ups and this channel still to be the one to play. So yeah, that is obviously 10 or 15% downside from here. So worrisome, particularly the way gold is trading. But and I'm also, as I suggested earlier, was this all about this last bit here? Was this all about demand from the US for silver? Did that just suddenly get filled? But we shall see. Only time will tell on that. But it is at a precarious point. Where is the silver? It's that one, I think. So we've got this same thing, the 2012 to present day gold divided by silver ratio, which looked like it was about to break through. Maybe that's an algo, that's something that has stopped that happening, hasn't it? We're just about to punch through with silver strength, and that's reversed. But is that just a consolidator before we go back? Off to Specsavers. Yeah, I think my computer needs to go there. I'm nearly finished anyway. So we're back to our classic of the move index and stocks. Obviously, the volatility is there in the S&P. We can see it on a day-to-day basis. That has started to get more fearful. We're at sort of coming off weekly highs. Again, we're not really that bothered unless it goes into the 20s. I think we're probably going to reverse back down into this. In fact, it's had an intraday range already, hasn't it? I don't know what caused that. And then obviously bonds, that's much more sanguine, much more relaxed. It's hardly moved. So people are ever more confident in the US bond outlook. That is telling you that they are confident in the interest rate cutting environment. What else we got left? We've done the silver. So yeah, look at that. Be interesting how you hear people talk about this over the weekend, because this when we start to get proper advanced declines, that was the rotation of more stocks going up than down, and we've got the opposite. But that doesn't mean that the Nasdaq and S&P aren't going to go up if that is due to the heavyweights. So we'll have to see how this develops. It isn't necessarily a buy or sell, but because we've had weeks and weeks of negative AD and yet the market going up. This is the nuance relative to the market weights in evidence. Got that one. Oil, that's had a couple of drawdowns again, so it looks like it's put in a three-wave, and we've now bounced off the good data, API data, EIA data, etc. It's just consolidating. Oh, that's a buy with the B low here as a stop loss. Should have one more high for the move, and I think it stops short of being a 1-for-1. I think we stop in the 89.90 idea on Brent, but I don't know how many people play oil, but it's useful to have a look at what's going on for the underlying demand picture. We obviously had mixed Chinese data during the week, etc., etc. Silver gold is really tough, top trader. Yeah, that's the problem at the moment. It's still valid. The deep pullbacks. There's lots going on that we can't actually see. With the whole physical side, we had a small insight for the last couple of weeks on the exchange, but I think we've just got to believe in the long-term trend until it breaks. I don't see any reason why it should fundamentally for the moment. And it's all about where the physical guys are and when they've asked for delivery. At the moment, they're not stopping the delivery, and it is interesting. We got all those deliveries when we were expecting that at the end of June. They got pushed out into July. So any activity at the start of July is going to be maybe you've got until the end of the month, if not into the start of, if you've asked for it in the next contract. I do think the market is still short gold. It's just where those pockets are, and you've got the paper market smashing it down, as you would if you're a market maker and you want to try and get them on side, and you want to try and scare someone to sell you some physical. They don't seem to be doing it when it's going up too much. Anyway, I hope that was useful. Are there any other questions before I sign off? And the markets are about to open. If not, see you Monday, and let's see how the rest of today pans out. Literally. Take care and good luck. Speak to you soon.